You might actually be running a business right now with unlimited personal risk, and you didn't even have to sign a single piece of paper for it to happen. Seriously. If you've started selling a product, maybe doing some freelance work, or offering a service without officially registering a business, your personal savings and, yeah, even your home could literally be on the line. Welcome to This Explainer. Today, we're going to fix that. Welcome back to Business Basics Hub. Okay, before we really dive in, let's just quickly cover our standard disclaimer. This explainer is for general educational purposes only, so it's not legal, tax, or financial advice. Our goal here today is just to give you clear, simple, absolutely no fluff guidance so you can make the absolute best choices for your new business. All right, so here's our roadmap for today. We'll kick things off by looking at the two default business structures, talk about why this choice really matters, go over some big beginner mistakes to avoid, and then finish up with a super simple guide to forming your LLC. Section 1. The two business structures. So first up is the sole proprietorship. The absolute keyword here is automatic. A sole proprietorship basically happens by default. The very moment you start earning money on your own, say you get paid for a freelance writing gig or maybe you sell a handmade craft, boom, you are a sole proprietor. There is zero paperwork to file and zero setup cost. Sounds great, right? But here's the catch. There is zero legal separation between you and the business. In the eyes of the law, you and your business are the exact same person. Your business's money is your money, but, and this is a big but, your business's debts are also your personal debts. Now, our second structure is the LLC, or limited liability company. Unlike a sole proprietorship, an LLC is a formal business structure that you actually have to actively create. When you form an LLC, you are essentially building a thick legal wall between your personal assets and your business liabilities. The business literally becomes its own separate legal person. It can open its own bank accounts, sign contracts, take on debt. If your business ever faces a lawsuit or bankruptcy, that legal wall is there to protect your home, your car, and your personal savings. Section 2. Why this choice matters. As a sole proprietor, you take on unlimited personal risk. Honestly, it's kind of like leaving the front door to your house wide open. If your business gets sued by a client or you just can't pay a supplier, those creditors can walk right through that open door. They can seize your personal savings or even put a lien on your home to settle the business's debt. It's scary stuff. But on the flip side, an LLC gives you limited liability. You've built that protective wall. Creditors can only go after what the business itself owns, keeping your personal wealth totally, safely locked away. So you're probably wondering, why doesn't everyone just start an LLC right away? Well, let's look at the setup reality. A sole proprietorship is completely free. It's instant, and there are no ongoing state fees. An LLC, though, does require a bit of an investment. It usually costs somewhere between $50 and $500 to file the paperwork with your state. It takes a few days or weeks to get approved, and most states do charge an annual fee to keep it active. But I really want you to think of that cost as an absolutely essential insurance policy. You are buying a legal shield. The peace of mind alone, it's totally worth that upfront investment. Section 3. Beginner mistakes to avoid. Now, I really want you to ask yourself, are you making these rookie mistakes? Because getting the LLC formed is really only half the battle. Maintaining it properly, that's what actually keeps that legal wall standing strong. Let's just run through these real quick. First, if you ignore your ongoing state fees, your state will literally dissolve your LLC, and boom, your protection vanishes. Next, if you forget your operating agreement, you won't have the internal rulebook to prove your business is actually legit. Oh, and don't fall for the tax myth. An LLC doesn't automatically change how you pay taxes, it just changes your liability. But listen up, because the absolute most crucial mistake you can make is mixing personal and business money. If you pay your personal grocery bill out of your business account, or you deposit a client check into your personal checking account, you're doing what's called commingling funds. If you do this, a judge can look at it and say, well, you aren't treating this business like a separate entity, so I won't either. And they will completely tear down your legal wall. So please, never, ever mix your money. Section 4. Forming your LLC. All right, think of this part like a quick checklist we're just going over while grabbing a cup of coffee. Please don't let it overwhelm you. It's simpler than you think. Step 1, choose your state. For 99% of small businesses, you really should just form the LLC in your home state, exactly where you live and work. Step 2, pick a unique name. It just has to be different from any other business in your state, and it does have to end with the letters LLC. Step 3, appoint a registered agent. This is simply a person or a company with a physical address in your state who's around during normal business hours to accept legal mail for you. Step 4, file your articles of organization. Now, I know that sounds super fancy, but actually it's usually just a really simple form you fill out on your state Secretary of State website, pay the fee, and that's the moment your LLC is officially born. And step 5, draft an operating agreement. Basically, just write down the rules for how your business will be run and keep a copy in your files. Okay, moving right along to the final 5 steps. Step 6, get an EIN. That stands for Employer Identification Number. It is totally free from the IRS website, and it acts kind of like a social security number, but for your business. Step 7, open a separate business bank account. Okay, listen to me carefully here. This is literally the single most important action on this entire list. Take your new EIN, grab your LLC paperwork, go to the bank, open a dedicated account, and make sure you route every single business dollar through it. That is how you keep your legal wall strong. Step 8, get any local city or county licenses you might need to operate legally. Step 9, make a tax election. If your business starts making a ton of profit, you can optionally ask the IRS to tax you as an S corporation to save some cash. But hey, you don't have to worry about that right away. And finally, step 10, maintain your LLC ongoing. Just make sure you pay your annual state fee on time every single year. Simple as that.
See? That really wasn't so scary, was it? Now, as we wrap up, I just need to quickly remind you again that this content is for general educational purposes only, and it's not legal, tax, or financial advice. Laws and requirements definitely vary by state and by your own individual situation, so it's always a good idea to consider consulting a qualified professional for guidance that's specific to your business. But hey, if you found this explainer helpful, please give it a like, make sure to subscribe to Business Basics Hub, and hit that notification bell so you don't miss any of our future explainers. And definitely feel free to share it with a friend who might be starting a business too.
I want to leave you with one final thought today to really lock in what we've learned. Take a hard look at your current business setup. Is your personal wealth exposed right now? Are you operating as an automatic sole proprietor with your front door left wide open? If so, what step are you going to take today to start building your legal wall? Don't wait for a lawsuit or a bad debt to force your hand. Protect your hard work, protect your family, and go get that LLC started. Thanks so much for hanging out with me today, and I'll catch you in the next explainer.